In June of 2026, one website did $31 billion in trading volume in a single month. Not a hedge fund, not a stock exchange most people have heard of. A prediction market called Kalshi, the same site a lot of people still think of as that app where you bet on elections. 9 months earlier, the entire prediction market industry, every platform combined, was doing less than $5 billion a month. Kalshi alone just did $31 billion by itself in June. So I wanted to actually run the numbers on what prediction markets have become, how fast they grew, what they're actually worth, why 3 separate state governments are trying to shut them down, and why DraftKings and FanDuel just started spending like this is the biggest threat to their business in a decade. Here's the basic mechanic, because it matters for everything after this. On Kalshi or Poly Market, you're not placing a bet with a bookmaker. You're buying a contract, a share, that pays out $1 if something happens and $0 if it doesn't. Will the Fed cut rates in September? Yes or no? The price of that share, at any moment, is the market's live, tradable estimate of the probability. So a share trading at 62 cents means the market thinks there's roughly a 62% chance. Kalshi is the regulated one, approved by the CFTC, the same federal agency that oversees commodity and derivatives trading, back in 2020. Polymarket started as a crypto-native platform, settling trades in cryptocurrency, and only launched a CFTC-regulated U.S. app in May of 2026, backed by up to $2 billion from the company that owns the New York Stock Exchange. Together, these 2 platforms now account for something like 85 to 90% of all prediction market trading. This is basically a 2-company industry. And in the last year, the size of that industry stopped looking like a niche and started looking like a real financial market. Let's start with volume, because the curve is almost vertical. In September of 2025, combined monthly trading volume across every prediction market platform was under $5 billion. By April of 2026, 7 months later, that number had risen to roughly $24 billion a month. Then it kept going. Kalshi by itself hit $31 billion in trading volume in June 2026 alone, helped by a surge of activity around the 2026 FIFA World Cup, which the U.S. co-hosted that summer. For scale, if you annualize just that 1 month, 1 platform, 1 month, times 12, you get something like $370 billion a year. The entire U.S. legal sports betting industry, every state combined, generated about $160 billion in total wagers in 2025. One platform, on its current pace, is trading at more than double the size of the entire legal sports betting industry in America. And sports contracts are actually the majority of what's driving it. 87% of Kalshi's trading volume in March 2026 came from sports event contracts, not politics. The election betting reputation is almost outdated at this point. And it's not just, will this team win? You can trade on whether the Fed cuts rates at its next meeting, whether it hits 90 degrees in New York City tomorrow, who wins an Emmy, or whether a celebrity couple gets engaged before a certain date. That breadth is part of why the user base skews so young. This looks and feels a lot more like a trading app than a Vegas sportsbook, and it's built for a generation that already treats their phone as their brokerage account. Who's actually doing this trading? Kalshi says it has somewhere between 2 and 4 million active monthly users, with some third-party trackers reporting numbers as high as 5 million, and the average user is 33 years old. Polymarket's monthly active users hit a record 477,900 in one recent month, up 94% from the month before, and about 70% of its users are between 18 and 34. This is a young, fast-growing user base trading on an app that didn't meaningfully exist 5 years ago, and the money behind it noticed. And this isn't sketchy money. Kalshi's investors include Sequoia Capital, Andreessen Horowitz, Morgan Stanley, ARK Invest, and Coatue, some of the most established names in venture capital and Wall Street. Polymarket, meanwhile, went from a roughly $9 billion valuation in October 2025, tied to that NYSE parent company investment, to seeking $15 billion by mid-2026, up 67% in about 8 months. To put a $40 billion valuation in perspective, that's in the same range as major, long-established public companies. Bigger than most airlines, bigger than most household name consumer brands most people could actually name. A company that runs a betting-adjacent app most people had never heard of 3 years ago is being valued like it belongs on that list. So naturally, this got the attention of regulators, and this is where the story turns into an actual fight, not just a growth chart. The core legal question, still completely unresolved, does federal oversight from the CFTC override state gambling law? Kalshi says these are regulated financial derivatives, just like any other CFTC product. States say a sports contract that pays out based on who wins the Super Bowl is just a sports book with better branding. Kalshi has actually been winning most of these fights so far. It won preliminary injunctions against both Nevada and New Jersey back in April 2025, blocking those states from shutting it down. The Third Circuit Court of Appeals affirmed the New Jersey win in 2026, the first federal appellate ruling to say sports event contracts legally count as swaps under federal commodities law, not gambling. New York tried a different approach. Its state gaming commission issued a cease and desist against Kalshi in October 2025. Minnesota went further and became the first state to pass an actual law banning prediction markets outright, set to take effect August 1st, 2026, only for a federal judge to block that law from taking effect at all, citing federal jurisdiction. And this isn't just a blue state fight, which is what makes it more interesting than a simple political story. The CFTC itself went on offense and sued the state of Kentucky over its crackdown on Kalshi and Poly Market, breaking what had been a pattern of this only happening in Democratic-leaning states. When the federal regulator is suing a state to defend a company it approved, that's a genuinely unusual legal situation, and it's a sign of how seriously Washington is taking this fight. Then, on July 31st, 2026, days before this video, New York's Attorney General filed the biggest shot yet, a lawsuit against Kalshi seeking at least $36 billion in damages and penalties. $36 billion. That's a bigger number than Kalshi's entire valuation was just 2 months earlier. Almost immediately, a federal judge stepped in to shield Kalshi as the CFTC pushed back against the state's authority to bring that case at all. Nobody knows how this resolves. It's playing out state by state, in real time, while the trading volume keeps climbing regardless. Here's the proof that this isn't a niche threat. The sports books that would lose the most are already spending like it's an emergency. DraftKings and FanDuel are jointly putting roughly $600 million into marketing their own prediction market products in 2026, about $300 million each. For comparison, DraftKings' own prediction market product did somewhere between $85 and $190 million in volume in April 2026 alone, a product line that's barely a year old, already generating real numbers. Meanwhile, their core business, legal sportsbook betting, is enormous, but growing slowly. DraftKings' sportsbook handle rose just 1.5% year over year in Q1 2026 to $14.1 billion for the quarter. Executives at Penn Entertainment, BetMGM, Flutter, and DraftKings have all publicly flagged the same thing on earnings calls. The 2026 NFL season is being treated as the first true head-to-head test between traditional sportsbooks and prediction markets on the same customers at the same time. So with all that money and legal risk, here's the question that actually matters. Are these markets any good at what they claim to do? Predicting outcomes? Historically, yes. More often than not. Research on the older Iowa electronic markets found that market prices beat same-day polling roughly 74% of the time, with an average error of about 1.2 percentage points versus 1.62 for polls over the closing days of a race. The clearest recent example, on election eve 2024, Poly Market had Trump priced around 57%, while most public polling averages showed something close to a toss-up. The actual result landed much closer to what the market said. But there's a real caveat here, and it's worth saying on camera. These markets aren't some mystical hive mind. Mostly, they're just aggregating the same public information faster than polls can. And because trading volume on any single market can still be thin compared to a stock exchange, a small number of very large traders, whales, can meaningfully move the price on their own. Here's exactly how that played out in 2024. A French trader who went by Theo quietly built up more than $30 million in bets on a Trump win, spread across 4 different accounts so the size of his position wouldn't spook the market and move the price against him. When Trump won, those 4 accounts walked away with a combined $48 million in profit, and Theo's activity is widely credited with helping pull Poly Market's odds noticeably toward Trump in the campaign's final weeks. One well-funded, well-informed trader moved a market that millions of people were reading as public sentiment. Markets aren't lying to you, but they're not infallible either. They're a read on where the smart, well-funded money is leaning, which is a different thing than a guarantee. So here's the actual myth being busted. It's not, prediction markets are secretly rigged, or this is definitely just gambling in a trench coat. The real myth is that most people still think of this as small, a weird corner of the internet for political junkies and crypto people. It isn't anymore. This is a CFTC-regulated, Sequoia and Morgan Stanley-backed, $30 billion a month financial market that traditional finance has already decided is real, being built faster than the legal system can figure out what to call it. Whatever happens with New York's lawsuit, or Minnesota's ban, or the next state that tries to shut this down, the money, the infrastructure, and the users are already real, and they're not shrinking while the courts figure it out. The 2026 NFL season is the moment to actually watch. The first real test of whether prediction markets replace part of sports betting, or just end up sitting next to it. Trading volume, valuation, and legal data in this video come from TRM Labs, DeFi Rate, CoinDesk, Yahoo Finance, Forbes, Legal Sports Report, and Front Office Sports. Full sources and exact figures are linked in the description if you want to check the math yourself. If you want more of these, real numbers behind the stuff everyone's talking about but nobody's actually measured, subscribe. New breakdown every few days.